New subsection, hidden springs or test, one in the same. You can use the term hidden spring or test, it's fine. It's a type of reversal action. It has spring characteristics that occurs at local support. That's important. It's considered hidden as it would be a spring via lower time frame. Exactly the same principles as a hidden upthrust yet in reverse. And when the market reacts, we'd like to see it weak to make sure there's no supply. And as a bullish setup, it's more favorable in an uptrend. Higher odds of success. So let me just clarify these terms before we move on. So a spring is when we come down, we bounce off, then we come back down, and then bang, we have a spring bar. So this is our anchor point. This is our spring bar, and we have white space in between the touch points. Okay, so we have all this trading. This is a spring, whereas a hidden spring is different, because we come down and then we might hold a level, dip down. So we might hold a local level of support, dip down to reverse and close firm, and this bar here is our hidden test. We're testing for supply before markup, before higher prices. Different to a spring. I will bring up the spring, we come down, we test here, then we come back down, and this will be our spring bar. We have white space. Here we have no white space. Okay, all the bars are together holding at a local level of support. Again, just repeat myself, it's testing for supply down here to make sure that there's no further supply before markup. Good. On to our first study. Hidden tests. Live cattle futures using a 60-minute time frame. This example highlights the somewhat ambiguity of hidden tests. So let's crack on. Context, we are in an uptrend. We come from down here. Let's do these in reverse order. A here, beautiful. It's a textbook hidden test. We have a nice wide spread that dips, doesn't have to be wide, mind you, but we do dip down to reverse and close back above this local support with a surge in volume. Okay, it dips under all this action here to reverse and close firm, which of course is the nature of the hidden test. It isn't a spring. Okay, just to clarify this, why? Because a spring will say this is our touch point here. We had come up, then we come back down, and then we spring. We have white space between the anchor points, but here, as you can see, we're holding this level. This is not spring in action. This is a hidden test. And what's it testing for? It's testing over here. It's testing for supply on this high volume bar before markup. The purpose of testing, as A does here, is to disconfirm supply. So if there's no supply, we should rally. And we do. This was a successful test. Then we come to B. B here is a hidden test. It dips under to reverse and close firm back above this local level of support with a little pop in volume. However, difference being, I can't trade B. B is a very, very difficult trade to take. Incredibly hard to take. Although we do get surge in volume and we do hold, you know, it is slightly ambiguous. Okay, whereas A, we can see that this level is clear and we're holding. Big difference. We need to use context. Always use context. And then C, again, another hidden test. Dip down under to reverse and close firm. However, again, this is a very difficult trade to take. I mean, out of B and C, C is more plausible, or should I say, I would rather trade C than B. B, I wouldn't even think about trading. But it's important to recognize the testing behavior because it's a subtle sign of strength. What's it testing here? again, it's testing this high volume bar. We note buying emerges. But C, what do we note about C if we take into consideration the background? We come down, we rally up, we get some good buying, and we manage to break these highs. We upthrust kind of action here. Then as we start to react, what happens? Close, close, close. We cluster. Okay, so we can see that price is unwilling to go down here whilst a low of support. Yet, that this is a 60-minute time frame. So from these 4 bars here, 3, 4, 5 bars, you know, to say 4 hours worth of trading, we can't make lower prices after we get a fairly decent move up. So this action here, we're trying to pull back, but we can't. We hold. This dips down. What's this testing? It's just testing this bar here, making sure there's no supply before markup. Okay, don't forget this bar breaks something. It breaks these local highs. We just want to make sure before higher prices, so we dip down, bang, no supply. Okay, let's go higher. And this is the nature of testing. The purpose of this chart was to illustrate that tests should not be blindly traded. Even though we are in an uptrend. I mean, bars B and C are incredibly difficult to trade. A, on the other hand, is a no-brainer. We can see that this accomplishes a great deal. Sellers had ample opportunity for lower prices before reversing to close, boom, back above with support here. Okay, this is a good test. And look at the response. You know, and the response from this test. We even get a good response here, but they want to come back to retest before higher prices. There's nothing wrong with that. You can test 3 or 4, 5, 6 times. Even though B and C are very difficult trades to initiate, it's recognizing the behavior. That is of value because it adds an element of strength and further down the line for other potential setups. Or if we're in a position, say we're long from down here and we come up and we see this test in action, good. That's excellent. Although we may not get a trade, it helps us to confirm that, okay, higher prices are on the cards. And that data, of course, is of use. The purpose of a hidden test is that we're looking for the lack of supply before markup. Here, we're testing this breakout bar just to make sure there's no supply before markup. Here, we're testing this high volume bar before markup, and we can see both of them are successful. We should often get moves straight from the test bars. Why? Because the nature is to disconfirm supply. So if we disconfirm supply, the market should rally. Okay, it's logical, and this is the nature of testing. Quickly wrap this chart up. Hidden tests are very useful. However, they do on occasion provide a trade, like here. I mean, out of what, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, out of nearly 2 weeks worth of trading, it does produce one setup. That's okay. It still produces a good move. However, we need to recognize testing. Why? Because it tells us a great deal of information. Because we can understand why the market is pulling back. It's pulling back so it can test an area before markup. So we can test this area before markup. Therefore, we understand more of the chart. If we understand the sequence of bars or events or of how the markets operate, so we can read the chart with more depth and understand the moves and the behavior and why it's doing what it's doing. Push up, come back, test, no supply, rally. Come back down, okay, we get a high volume bar here where we gap down. Push up, not ready to take off. Why? High volume. Test, maybe a bit high. Come back down, then maybe stops or whatever under here. Test, no further supply, reverse, take off. Okay, so we can read this. We can read what the testing action implies and how it helps us. Okay. Hidden tests are a little tricky. They're not the most straightforward, glaringly obvious of concepts or principles to understand, and they don't provide that many trades per se, but it's the character and it's the information it gives us that is of value. Okay, good. On to the next chart.